Well, good evening, everyone, and welcome back to another Friday and another weekend video. It always amazes me how quick these weeks go. Probably just indicative of my aging years and how quickly life disappears in front of your eyes, especially when you have kids growing up in front of you. You seem to be growing down and they seem to be growing up. But anyway, that's neither here nor there. I'm going to go through the markets again. I'm going to start as always on the 4-hour chart and go down to the short-term chart, either 30-minute or hourly, and then we'll give a kind of a review of the week and what we expect to happen next week. Excuse me. Like I said in tonight's update, Monday is Memorial Day in the States, so there will not be any update on Monday evening because the market will be dead. I don't think there'll be much happening on Monday anyway, so there'll be nothing to really comment on. So we'll be back on Tuesday, and hopefully we'll have some more. Well, we'll most definitely have something to talk about anyway. Whether it moves in our favor or not is another thing. But I'm quite confident now, actually, to be honest. Okay, so let's get into the market. So this is euro dollar, and this is the medium-term count that I'm looking for, that I'm watching. So we have a development of a pretty clear 5 waves down, I think, ending pretty soon. We have, that's the recent high, 125.56, I think. So that completed a possible B wave, and now we're heading down into a very large, long, protracted C wave, which I think eventually should bring us below parity. Forgive me now, I have a cup of tea here as well, so I'm going to be drinking that as I talk. Okay, so wave B is complete, and now we're moving down into wave C. So what we've got so far is a possible wave 1 completing soon enough. This is wave 1 blue. Wave C should be in C in black here. It should be overall a 5 wave, well, possibly a 5 wave pattern. Depends on how it. I'm looking out into years ahead now, so it depends obviously how it plays out. But you would expect a 5 wave pattern in a C wave. So we're now completing wave 1 blue of wave 1 red of wave C black. So this is the very beginning of a long protracted downturn, bear market, which could even herald in the end of the euro, possibly the euro altogether, but definitely the euro as we know it. Okay, so let's get back to things that are within our reach at the moment. Okay, so we have 5 waves down, pretty much complete. 1, 2, wave 3, a short wave 4, and we're drawing close to wave 5 here now. So we'll go down into the half-hour chart and view this 5th wave here. It's taken a few minutes for me to get up to speed here. Okay, so that's wave 3, short kind of stab higher in wave 4, which reached the previous 4th wave. And then now we're working on wave 5 down. We have wave 1, running flat wave 2, wave 1, 2, 3, 4, 5, which is ongoing in wave 3 brown. And so now we are in wave 3 of wave 3 of wave 5, if you can follow me. So if all goes to plan, next week we should have a continuing acceleration lower. Wave 3 brown here should take us down into the 114 area, I think. Let's see if we get we have 161.8% extension there at 114.50, so that'll probably be minimum target for wave 3 brown. We have for wave 3 in pink here, we have a minimum target of for wave 3 brown, we have a minimum target of 115.90. So I don't think I think the minimum target would be a little bit shy now of what we should expect in a third wave of a fifth wave. So I reckon that this third wave is extending lower, so we should see further acceleration lower next week. A break of minimum target would be, obviously, it's in the name, it's the minimum target, but I think a break in the minimum target would probably signal an end to wave 3 pink, which we should then expect some sort of correction higher in wave 4, or a triangle maybe of wave 4, and then a further decline in wave 5 of wave 3 brown, which would that's wave 2 brown, so we're heading down in wave 3. Okay, so euro dollar next week, continued declines, and at the very least a break of 115.97, down to the 115.50s for wave 3. Okay, so let's move on to pound dollar. Excuse me. This is the 4-hour chart again. So we have, last week we were looking for further declines. This week we've got further declines, and I think we're nearing the completion again of a fifth wave down in wave 1 off the recent highs. Now another gulp of tea there. I'm trying to keep my throat lubricated while I talk. Okay, so this is wave 1 green to the downside, and eventually over the next couple of weeks we'll see a corrective rally, possibly back into this previous fourth wave here, which would be about 136.50 up to 137.13. That was the previous low of the next further back fourth wave. So we have a kind of 2 fourth waves there, if you can see, between 136 and 137. So that would probably attract the correction in wave 2 green. We'll actually put that back in there now. Wave 2. Yeah, so eventually over the next couple of weeks we'll see a corrective rally into wave 2, and then a further decline in wave 3. So that's the 4-hour chart. Let's get down into the hourly chart to see how that wave 1 green is completing. So here you see the key support there. Actually, we did get a break of key support today, which is good for us. That's 133.10, and this is key support. Sorry, 133.01. I'll show you why that is key support here. And that's the low there of the previous wave 2, so that's 133.01. So that break of that previous wave 2 kind of indicates that this previous rally into the highs is complete. And obviously, if we get a break of that, the further low there in wave B, labeled wave B there at 130.41, that pretty much rules out any further rally for cable for a long time to come. And the fact that we've got 5 waves down now, almost complete. Okay, so back to the hourly chart. I was tracking this 5th wave here this week, so we probably have wave 1 to maybe wave 3 complete. I'm not entirely sure about that. It depends on this alternate count here. If you see circled in red there, we either have wave 3 complete and now a contracting triangle, wave 4 in pink there, or we have wave 1, 2, and now we have 1, 2, and we're getting an extension in wave 3 pink lower, which you can't rule out at all whatsoever. It all depends probably on the early trade next week. There won't be much happening on Monday, but definitely Tuesday. If we see a further contraction in the range here, then we can say that probably we're getting a contracting triangle wave 4. Let's look on Monday and Tuesday to see if that's probably the smart move from here, is just to see if we get further contractions in this range. Either way, I think the larger pattern in wave 1 is completing out now over the next, probably by the end of next week, we'll probably have a completed wave 1 in green. And then after that, we can expect a turn higher in possible wave 2 green, and we should see a 3-wave corrective kind of rise into that 136, 137 kind of band of resistance there. So anyway, for next week, again, just like Eurodollar, possible consolidation there on Monday and Tuesday, with a further decline into Wednesday. And this decline phase should probably be finished by the end of next week. Okay, so dollar yen. We were expecting a move down into wave 2 last week. We were expecting this wave 2 to begin. And this week we got a nice stab lower in wave 2. So far, it's as you can see on the 4-hour chart here, it's reached the lows of the previous 4th wave there in wave A down, and we were getting some sort of base of support there off the 200 period moving average. So we're probably moving back up into wave B. We have A done, wave B up, and then we'll get wave C down. So let's get down into the hourly chart. So like we were expecting, we got a nice 5-wave down in wave A, completed yesterday, I think. So now we're possibly getting, I think wave B has probably started, and it's possibly this corrective rally in wave B is possibly a flat correction. So 3, 3, and 5 would be the internal wave pattern. So we've got 3 waves up, clear 3 waves up in A there. And B seems to be a pretty clear 3 waves down there. You can see that 3-wave pattern there. And what we'd expect from here is a 5-wave move higher in wave C up into about, let's get rid of that support there because it's no longer support, up into that, see that double peak there. We've got a kind of a pivot area of about 110 there. So that's why I'm expecting wave B to rally into that area there. We've got 2 previous highs and an interim low in that 110 area. So between there and 110.33, we've got the previous 4th wave. So we've got again a nice band of resistance there to attract a corrective wave, and off that then we'll get a further decline in wave C. So next week we're looking for, early next week, we're looking for these for wave B to complete. And then by the end of next week, we should be looking at an almost complete, or if not complete, 3-wave correction in wave 2, which will, at that point, once we've got our 3 waves complete, we've got 5 waves up, 3 waves down, and then we'll be looking at a very large rally phase ahead. So that's dollar yen complete. Okay, so now we've got stocks. The Dow, excuse me. Now we're looking at 3 degrees of, excuse me, we've got 3 degrees of 1-2 waves to the downside. Again, I'll be looking at this over the last week here, and this move, which is labeled wave 1, 2 blue, and then wave 1, 2 in green. This could also be viewed as a possible wave 1. A possible wave 1, 2 in blue instead. So we could have a larger wave 1 and 2. That'd probably be the most applicable alternate count at the moment. And seeing as I'm here, insert shapes, ellipse. So that would probably be the most applicable alternate count, and I would nearly suggest that this larger degree wave 1 and 2 is probably more fitting at this stage. So either way, we've got a 3-wave correction, a pretty damn clear 3-wave correction, which reached our projected highs, and then since that reaching the trend line has declined off that trend line again in a pretty impulsive fashion at a lower degree. So let's get down into that lower degree here and we'll examine that area there just to see how that short-term pattern has developed. Okay, so that's the high of wave 2 there. I think we can count 5 waves down in wave 1 and possibly an expanded flat wave 2, or sorry, it was a running flat wave 2 in the cash market, expanded flat here in this derivative market. So I think we've got 1 and 2 complete, and the fact that we've got a pretty sharp decline today off the highs again suggests that the momentum is building again to the downside. So we've got a correction in 3 waves up complete in possible wave 2 or a larger degree wave 2, and now we're moving down again with impulse patterns to the downside. So for early next week, which would be Tuesday, Wednesday, if we see that the interim highs there, or today's highs hold, which was about 24. Was it 850? I can't exactly say right now. If we see that high hold, and we see further, say, a corrective rally in a possible second wave here. I'm finding it hard to concentrate here because I've got a dog snoring behind me. Excuse me when I throw a book at the dog. This is very professional, isn't it? Shush, dog. I'm sorry. Oh, good Lord. You can only try, can't you? Okay. So, like I was saying, I've lost my complete train of thought there now because of that damn dog. Hey, okay. How do you compose yourself after that? Okay, so that's 3 waves up in wave 2, possibly complete. And like I said, the cash market was not an expanded flat as is here in this derivative, but it's a running flat, which completed below the previous wave A high. And the sharp move down is a pretty definite wave 1. So early next week, if we see a correction again to a lower high, then we're pretty much on high alert that this market could turn rapidly quick to the downside late next week. And if it does, then we can pretty much say that this wave 3 down has begun. I'm pretty confident that, I suppose you can never be sure, but you can be pretty confident that the balance of probabilities is shifting towards the bearish side again. 3 waves up complete within a nice trend channel, targets hit, impulsive moves down off the highs, and corrective rallies. So everything in the jigsaw puzzle fits together. So next week I would expect a corrective rise in a possible wave 2 to another lower high, maybe in about the 24,750, 790 area, and then further declines. And we will we'll follow it as it goes. Okay, so let's get to gold. So we've had a nice move up this week in gold, which we were pretty much expecting last week. So we've got 5 waves down in this completed C wave of wave 2 here. We reached our targets. We reached the 61.8% retracement. That was the 1285 level. Pipped below that, and then started moving back up again, above that again. And we got a nice rally above the 50 period moving average here on the 4-hour chart. And we've corrected off the highs slightly this evening, but I think next week we should still continue moving higher. We can see again that we had this bullish divergence in place for probably a week before this week's, probably, was it last week? Most of last week we had this bullish divergence, definitely in RSI, and MACD this week has given us a buy signal with RSI as well. So I think we're on track for a move up into a pretty large wave 3 green, which is beginning right now. We don't have our Elliott wave signal in place just yet, and that'll come with 5 waves up or the 3 waves down, obviously, as usual. But we'll track that as it happens. When it does happen, if and when it does happen, we will be on point. Okay, so like I said this evening in the update, we're getting quite close here. If this is a fourth wave here, we're getting quite close to the previous wave one high. And that depends. This wave one high could also be. You could interpret this previous high here at the 1293 level as the wave one high, and then we possibly got an expanded flat off that high. So it's kind of betwixt and between. When, like I've said 100 times, if a large degree trend is turning, you're grappling with the structure the whole time to see what fits best. And this evening's update, I said that this could also be a 1-2-1-2 pattern, in which case 1288 shouldn't be broken. If it's a clear 5 waves up in a possible wave 1, in that case 1296 should not be broken, but at the very minimum 1293 shouldn't be broken. I'm going to stick with the clear straight 5 wave pattern to the upside for the moment. The fact that we got a nice short green bar into the close this evening suggests that this correction it's probably finished, and we should see a move higher early next week. I think if this trend channel holds, this short-term trend channel, if that wave 4 there holds, and we start moving up on Monday and Tuesday, a break of the previous wave 3 high, which would be today's high, about 1307, a break of that high will confirm that we've got a 5th wave underway. You could probably target the upper trend channel line there, which would be in the region of about 1320 for that wave 1 to complete. Then we've got 5 waves up, then we look for 3 waves down. And again, today's low, about 1299 or 1300, would serve as the initial target for wave 2 brown there. But then by next week, we should have 5 waves up, 3 waves down, clear Elliott wave signal. Buy while you can, jump in while you can, because I think the larger pattern to the upside is getting underway, and I think we're at an inflection point in this market which will be remembered for a long time to come. But anyway, baby steps. Each day we track what happens each day, and we kind of apply it to the long-term pattern and see if we can pull together a viable strategy, let's say. Okay, so let's get down to crude. So this is chart of the day, crude oil. And last week we were calling the high, and this week the market pretty much plunged. We're back down below $70 again. I don't think there's much else that you can say apart from the fact that we've got 5 waves up complete, and 5 waves up at a very large degree in wave blue, or in blue waves there, in blue labels, sorry, complete, which completes a C wave, which completes a possible 4th wave. And the very fact that we hit targets, we had a nice Fibonacci target there at 72. We hit that target, we broke down through it again, and that became resistance. And then yesterday and today, we just the price just collapsed basically. I think we can pretty much be as certain as you can be that the uptrend is complete, and we're now moving back down into a downtrend in a large degree, wave 5 in red labels there. I think that 5th wave down should at a minimum, it should wipe out the gains that have been made over the last 3 years. So we should break below $27 again. Even today's decline is quite prominent on the daily chart, isn't it? So we have 3 waves up complete. We have targets met. and we have a damned impulsive decline, a good impulsive decline to begin. You can see there, even on the daily chart, that the price has pipped below the 50-period moving average, the 50-day moving average there. On the 4-hour chart, it's completely obliterated that 50-period moving average, and we're down substantially down through the 200-period moving average. You could probably say that it's pretty oversold in the short term, but I think there's probably another leg down before this first wave down completes. So let's get down into the 30-minute chart. Or is it better viewed than the hourly chart? 30-minute chart. Okay, so this is the 30-minute chart. So that was the high, the recent high, 72.90. I think was the ultimate high of that possible wave 4 there. Off that high, we had the internal pattern here is up for grabs here. I'm going with a wave 2, which could be a running flat. So that's the best way I think that I can account for this long bar, or this long selling. This long decline. Excuse me, my brain is shutting down. It's late now. This internal decline here, I think it's the best way that you can account for that 3-wave move. Off that wave 2 high, we've got a pretty clear 1-2 extension lower in wave 3, a possible wave 4 at this evening's short rally, and then we're moving down again. We broke the wave 3 low, and we're probably moving down into a fifth wave of wave 3. So we've got 1-2 wave 3 completing, and we should see a corrective rally at wave 4, and then wave 5 with a break of key support there. This would be early by the middle of next week. So possibly Wednesday, we'd see a completion of wave 1 in grey, and then we would expect a return higher in wave 2, and wave 2 would target the previous fourth wave at one lesser degree. So we'd be talking again about $68. I think it should stay below $70 now. Even if we get a 50% retracement, which would be in the region of about, it'd be the upper 69s, maybe 69.60 or something like that. I think that'd be the higher end of wave 2 retracement. So at that point, we'll have a clear, large degree Elliott wave signal in place to indicate that the price has topped, long-term topped, and we're moving down into a new bear market. So this is interesting times in crude, and so far the wave count has held up well. I don't see any reason to change right now. Initially, early next week, I would like to, by the middle of next week, I would like to see a break of this key support here, and that key support would be the previous fourth wave there at one lesser degree, the previous fourth wave of the final leg up in that rally. So that is at between you call it 66.85. So that kind of wraps it up, I think, for this week. Forgive the interruption by the dog. I think next week is again looking very, very ominous for the Dow and for stocks in general. I think gold should give us a pretty bullish signal next week. I think crude should give us a large degree bearish signal next week, and I think the dollar should complete its short-term correction next week. Okay, that kind of rounds it up. I hope you have a great weekend. For those in the States, I don't know, do you say Happy Memorial Day? Can you be happy about Memorial Day? That's probably not the right words, but Have a nice weekend, and we'll see you back here on Tuesday evening. Godspeed, everyone. Have a good one. Bye bye.